whatever you think.
You want to start?
Me? You want me to introduce you guys?
No.
You can start. Yeah, take the floor, it's yours till 10:40.
Let me see. Is this, can we, take all this out?
Yeah, no problem.
Good morning. Morning. My name is Ralph Acampora, this is my buddy Cedric. We came here to talk about technical analysis, but Cedric is going to talk a little bit later about the CMT Association. Morning. Thanks for coming. I started teaching technical analysis in 1970. I didn't say 1870, 1970, joke. At the New York Institute of Finance, which is the School of Wall Street. So I taught for literally over 40 years. All those guys on the floor of the stock exchange, they all took my class. And in 2007 or 8, I decided after all those years, I'm going to make slides because I did everything on the chalkboard. So these are the slides, and you'll get the slides. I'll give you the slides, okay? And we only have about an hour, but I'll go through as much as I can, okay? And when I put the slides together, I decided that I wanted to go to the Bible in Finance. That's this book called Security Analysis by Professors Graham and Dodd. That book was written in 1934. You ever a fellow by the name of Graham and Dodd, and in the book, this is the Bible in Finance, I looked if there was any phrase that had to do with technical analysis. And look at this. The basic principle in finance is that no investment decision regarding a common stock can properly be made except in the light of a specific price. I'm a price jihadist. Price is my God. When I get up in the morning, I want to know what the price of my stock is. Do you care what the price of your stock is? Well, you care? Of course you do. You bought the price, you bought that's important to you. So when you get up in the morning, you talk finance and all that stuff, well, you're talking stocks, I wonder what my price is. Okay. Price and time is important. You know what he's talking about? Time. Why did you buy the stock? Oh, you're a day trader? So time for you is every trade. Are you a long-term investor? You know what the government says for you tax-wise to be a long-term investor? You have to hold the stock for a year and a day, at least. That's long-term. So you use different kinds of statistics to measure different attitudes, different approaches to your philosophy. You're a day trader? Oh, you're an intermediate term investor. What does that mean? Well, I'll hold it for 6 months or so. Okay? All right. There are different charts for different aspects of this. Price earnings ratio. You know what that is? Right? Hello? Yes, of course. Half the formula is technical. The price. Earnings are fundamentals. And this is one of the most important formulas in the business. Look at that. And they're talking about actual behavior. This isn't the Bible. You know what actual behavior is? We call it sentiment. How do you feel? You feel good? Bullish? Excited about the market? You're excited about your stock? Good. Oh, you're depressed, huh? All the stuff going on, tariffs in the country. Oh my God. Oh. So we watch people's enthusiasm or their fear in the marketplace. That's part of what this subject is all about. most important date in modern technical analysis history for me personally. And it's Friday, December 7th, 2004. Myself and three other guys stood in front of a bunch of lawyers with the SEC, the New York Stock Exchange, and NASDAQ, and we were fighting for the defense of the subject of technical analysis. Because up to that point, technical analysis was not considered a legitimate form of research. Could you believe that? And when I heard that Sarbanes-Oxley law came out that year, it said all analysts, and I was an analyst in Wall Street, you have to have a CFA. You know what a CFA is? Chartered Financial Analyst designation. That's fundamental. That's what you guys study in school. I said to him, wait a second. I'm an analyst for 35 plus years, a technical analyst. So we fought the argument. We went in front of these guys. One of my buddies spoke 3 minutes on the history of technical analysis, talked about Charles Dow and all that sort of stuff. And the second fellow talked about the history of the organization that we had. At the time, it was called the Market Technicians Association. They changed the name a couple of years ago. It's the CMT Association, okay? And the third fellow talked about our exam, the CMT exam, which Cedric is going to talk more and more about in a few minutes. And I get up and I had the last 5 minutes in front of all these lawyers. Man, I was nervous. And I said to them, imagine if you lawyers tomorrow morning are being mandated to take the medical boards. They're looking at me like I'm crazy. I said, assuming you could pass the medical boards, you wouldn't use that body of knowledge in your daily work as lawyers. They're going, yeah. I said, well, that's what you asked me to do. For heaven's sakes, test me on my body of knowledge. And with that, one of the lawyers jumps up and says, oh, Ralphie, we see you on television. You're a nice guy. And he shoves a chart in my face. And he says to me, what's fact on this chart? My knees, I got to tell you, were like rough. I said, oh, my God. I looked at it. That's what price is a fact. Price is a fact. That's what people think IBM's worth. Yes, it's fact. Now with that, I pressed my finger on his chest, and I said, earnings are an estimate. You restate earnings, you never restate this trend. And he said, oh, that's a good answer. I said, my friends, let's get out of here before they ask another stupid question. 3 months later, the SEC came out and said, there are two analysts on Wall Street. One's a fundamental analyst who follows companies and has a CFA. Second analyst is a technician who has a CMT and follows stocks. Are you with me? I'm very proud of that. That's what this guy's going to be talking about. If you come into this business, get a CFA and get a CMT. That's why I'm here. That's why we're here. To tell you, this is the real world. Price is a fact, earnings are an estimate. You never restate that. You restate this one, fundamentally. You know what I call it? I call this fusion analysis. You put both together. When you do your homework, when you look at the stock market, or you look at equities and whatever, and investments, you gotta put it all together. I was a very lucky guy. I had a couple of mentors that really helped me out early in my career. One of them was a fellow by the name of Ralph Rottner. He was an older gentleman. I started in this company in 1970, and he was retiring, so the firm was losing around, and we're getting around. I ain't no fan to join and he takes me into his conference room, just grabs me by the back of the neck, this old man. He says, sit down, and he puts a big circle on the board. I think he had the letters GM, General Motors. I have the letters IBM. And he said, when you see an audience for the first time, do me a favor. I said, yes, Mr. Rod, doing it for 9 million times. He said, tell the audience there are two parts to IBM. Ready? IBM, the company. They have a PE multiple, right? They have competition. They have management. You better check the management if you're going to do real research on it. You better make sure these guys know what they're doing when they're running the company. And by the way, they pay a dividend. And everybody says, well, gee, now that they checked all that, they know IBM. And the old man says, no. There's another part to IBM.
that you're not looking. If you want to see the whole picture, this part 2 is the stock. Follow this, guys. Price, of course. Write this note down.
Stocks do one of three things. I'm joking, you don't have to. Stocks go up in price, they go down in price, and guess what? Sometimes they flatten out, they go sideways. They never go back. Up, down, neutral. You with me? That's called momentum. Does your stock have upside or downside momentum? We have lots of ways of measuring momentum.
Second thing, volume. Ha! Do you care what the volume of your stock is?
Let me ask you a question. If your favorite stock is up a point today on 1,000 shares, you're happy. What happens if that stock is up another point tomorrow on 100,000 shares? You're happier. Why? There's more money going into it. That means there are more buyers. They're believers. They want it to go up. That's what you want. You want rising price on lots of volume. That means everybody's in there with you, baby. And that's what pushes stock prices up.
It's called demand, or buyers. Time, oh, we talked about that a moment ago. Am I a day trader? Am I a long-term investor? Am I gonna hold it for a few months? What am I doing? You have to decide. And the last thing is psychology.
Let me ask you a question. Can I ask you a question? What happens if tomorrow morning you found out that the chairman of IBM liquidated his entire portfolio of IBM stock? He got out of all of it. It wouldn't bother you? It would bother me. Sure in hell it would bother me, because who knows the company better than he does? He's the guy. Yeah, so, and you know, a lot of us do, and there's ways of looking at it. That's called insider activity. You wanna know what the insiders are doing? Because they have to register whether they buy or sell. If you see a lot of insiders buy. In the old days, when I running around the country, I had a lot of business friends actually in Texas, the oil people. And I got to know the guys that drilled oil, Halliburton, Schlumberger. I remember sitting down one day, having dinner with these guys. It was just fun. And one guy says, yeah, I hate your stock. That's now so low. And the guy says, I dump yours, your stock. And I'm saying to myself, oh, these guys are selling the oil stocks. I have to get that watch out. Got what I'm saying? You with me? Okay.
So that's the whole picture. If you're gonna do research,
You're gonna do quality research, okay?
you start with economics, guys. You can't wake up in the morning and not have a feeling of what the economy is gonna do, because it's gonna dictate what your interest rates are, the mortgage on your home, or the payment on your car, or whatever, okay? So, if I had my education due over, I'd probably start out as an economist. I really would. I'd like to know what's going on. Let's say you do your economic homework and you say, well, it's a slow growth economy, but everything's okay, but it's a slow growth. Okay. Next step you do is you take that economic overview and you talk to these people, these fundamental analysts. Guess what? Find out from them which companies and sectors do well in your economic overview. That's part 2 of quality research. Those are the CFA guys. You with me? Number 3, do quality research. You talk to quantitative analysts. I call them quants. These guys don't talk to economists. They don't talk to. They get thick glasses and they sit in front of their computer all day mumbling, and they back test numbers. They'll take your earnings on IBM and go back 50 years. They'll tell you whether it's overvalued, undervalued. They'll tell you what the earnings are. That's great stuff. Important? Absolutely. Now you got your gun loaded. You're looking at your target, okay, because you did your homework. Before you pull the trigger, will you do Ralph Acampora a favor? Would you look and see if the stock's going up or down? Technical. And that's the CMT. I'm being very humble. You look at it last if you want. Me, I get up in the morning, it's the first thing I do is look at charts, I'm sorry. That's the way I was educated and brought up in the last 50-plus years doing this. Okay. Let's skip all this. Look at this. This is the organization that you're going to hear about in a few minutes, the CMT Association, which I co-founded with the two other guys in 1970, and we fought all the way, and now it's big, it's international. I don't want to take away from what Cedric's going to tell you, but it's fabulous. But look at their quote: "Navigate the gap between intrinsic value, fundamentals, and the market price, technical. Navigate it." Okay. The simplest chart in the world. You ready? Now we're going to get into the basics. I'm going to show you, by the way, when I get finished, you're going to look at the world with a different set of glasses. Okay? I'm going to show you how to look and analyze charts. Okay? And the simplest chart in the world is a line chart. Ready? Sound effects. I'll do it again. What do you do with the chart? Connect the dots. Look at this. See that? That's a line chart, simple chart. What is the most important price on the chart? The most important price is current price. So where is the current price, gentlemen? Upper right-hand corner. So when you look at the chart, your eyes to ear, God gave you a left hand, and you go back in time. I'll repeat. You start here, and you go back in time. Do you like this picture? Why? It's going up. You don't know what the heck you're looking at, and you like it already. That happens for you charted my weight. I mean, we'll get into that. Joke. My leg. We're trying to make this interesting and fun. You know what? Each dot could be a day. That's 6 days. Each dot could be Friday's close. It could be 6 weeks. Or it could be 6 months. Oh, in this day and age with computers and everything, that could be every tick in the stock. That's what your chart's going to look like. You got to determine what time you want to look at it. Well, I don't want to look at it intraday. I want to look at it daily. Okay, daily. Okay? That's a simple chart. Bar chart. Very common. That's price. You got the high, the low, and there's a little tick on the side is the close, and this bar on the bottom is volume. High, low, close, volume. Simple chart. That could be a day, a week, a month, a minute. You with me? Look at this one. Candlesticks from Japan. That's called the body of the candle. It's big. It's not like the bar chart, a little fatter. And the lines up and down, the Japanese call them shadows. I call them the high shadow, the low shadow, okay, on the body. Now watch this very carefully. Look at this. The opening price and the closing price. It closed higher than it opened on that particular day or week or whatever. So the candle is probably white, or you can make it green to be up, whatever color you want. Look at this one. There's the up shadow, the down shadow, the opening price and the closing price. Look at that. You can make that red if you want. Down period. In fact, if you go into the Wall Street Journal, in the C section, they have a chart of the Dow Jones Industrial Average. Since when I came into business, it was always a bar chart. Now it's a candlestick chart. Okay? This is point and figure. Each X is 1 point. Look at the chart. Whoop, whoop. See that? I'll do it again. See the top one wiggle and the second one wiggle? That's called a double top. Breakout. Joke, laugh. I'm trying to make this interesting. We talked about this before, day trading. If you're day trading, you get an intraday chart, okay? If you're shorter term, you're gonna hold it for a few weeks, a month or so, probably a daily chart. The cyclical movement, the word cyclical, spelled with a C, means it's the market movement or the stock movement's gonna last a few months, 4, 5, 6 months. If you say we're in a secular move with an S, that means you're talking long term, maybe a year or more. Right? Cyclical versus secular terminology. The 3 R's. Return, how much am I making? Well, you're up $10. Oh, okay. Risk. Well, that's what's so great about technical analysis. Not only do you hopefully be able to get you in at the right time, but more, just as important, is to get you out at the right time. That's risk management. How much risk can you afford to take? 5%? 10%? 100%? No, of course not. But following where you got in and where to get out of the chart, out of the stock, you can calculate, well, I'll only take a 10% risk, that's it. And you can put your levels in. Relative performance, what does that mean? Yeah, how's my stock doing versus the S&P 500? Okay? Or, hey, how is IBM doing versus, I don't know, some other technology stuff? Intel. Huh? That's relative performance, one outperforming the other. If you're really managing money, portfolio manager, you're comparing yourself against the S&P 500, because that's what Wall Street considers the market. And if you're running money, you want to do better than the S&P 500. And if you don't, guess what? Your history, you're fired. Okay, let's get into how to read a chart. What trend is this? Where's your eye, by the way? Up here. This is a short-term trend, last few days, okay? Longer-term trend? What trend is that? Come on. Up. There's volume. Gentlemen, please, if you don't do this, I'll haunt you. When you draw a trend line, the definition of an uptrend is higher lows. You have to make a higher low first, and then a higher high. Higher lows, higher high, over time. Get yourself a pencil and a ruler and connect the ascending lows. And as long as that bar stays above that line, guess what? I like it. I don't know what you think, but I like it. Why? Because it's going up. Okay. Where's your eye? Right? What's your short-term trend? Long-term? Downtrend is a series of lower highs and lower lows. You have to make a lower high first and then a lower low. And then you connect the declining highs. Declining highs. Would you buy this? I'd buy it with your money, not mine. Like that, huh? You laugh at some of my jokes. These jokes are older than you, let me tell you. I've been using them for 50 years. Forget this. Look at this trend. We saw an uptrend, we saw a downtrend. This is a neutral trend. The highs and lows are parallel over a period of time. Let me ask you a question. Look at this picture. Why is this stuff failing to go down below $20? Why? Come in. Come in, Rango. Are you out there? What? Why is it not going below $20? What's happening at $20? Someone is buying. Good. Bless you. Yes. If there were no buyers at $20, the stock would be 15. So the chart is telling you that someone at $20 thinks it's a buy. You want to say that there is demand at $20? That's the same word. Okay? And every time it gets to 25, it can't go any higher. Why? There are sellers. You want to say there's supply at $25? Same word. In technical analysis, and I hate this but that's the words they use, they call it support, okay? The stock is being supported at $20, and they say every time it gets to 25, it has resistance. When you're talking to the public, don't use those words. You know why? They don't understand what you're talking about. Just hey, Mrs. O'Brien, your stock has been going sideways for 5-6 months, but don't worry about it. There seems to be a lot of buyers at $20. If you said to her, oil is a lot of support, she wouldn't know what the heck you're talking about. Just say, I see a lot of buyers at $20. Oh, what? A little difficulty at 25. Oh, thank you, you should say. That's English. Speak English. Okay. This is a real situation you're looking at. Where's your eye? Let's take this. What's that trend? What? Neutral? Would you say there's some demand here, some resistance there? This looks like around 26 3/4 or something, right? This looks like it's 28 or something like that, right? What's this trend? What? Up? Neutral? Up? You know what you're looking at? It's a 5-minute chart. 5-minute bar chart. And when this happened, this is true story, I got phone calls, all the big clients. I mean, you talk about the huge mutual funds, Fidelity, and God, this is true story. I got so many phone calls. I get, Ralph, we got to buy this thing. The Saudis are buying, the Saudi sovereign fund, the largest sovereign fund in the world, was buying the heck out of this. Well, they must have been buying. By the way, 5-minute chart. See the time down here? This is 1 day, 2 day, 3 days. 5-minute chart, 3 days. See that? And I said to him, wait a second. Before I tell you to buy, let me do more research. So how does Ralph do research? Well, let's look at this chart. Let's look at this stock on a 1 minute, on a daily basis, okay? This is 5 minutes, it's daily. Ave Maria, what's this? Where's your eye? Huh? What's your trend? Down. Here's your 3 days, by the way. By the way, daily bar chart, you got, look at it, you got a couple of months, you got 3 months, 4 months. This one. The other day you had 3 days on one chart. Now you got several months. Are you excited about this? Yeah, you got a question?
Yeah, I do. So why would you take into account like the history of the previous? Like,
What's that?
The previous charts. Like, why would you take into account the history of the previous?
Well, because I
charts?
wanted to see what was happening. It was saying, hey, the last couple of days this thing went crazy. So I looked at it. You know, I said, yeah, wow. Went from 23 to 28 or something in 3 days. Woo. Nice short-term move. I agree.
That influences your decision to buy or sell.
What?
That influences your decision to buy or sell.
No. They said to me, this is large institutions, they're gonna buy and hold for a long time. They're not day trading, these people. So they said, this stock has done well in the last few days. I said, you're right. Now, Ralph, step back and tell me what the future looks like. So what do? I have to look at daily, then I look at weekly, and then I look at monthly. I'm taking you through this process that I go through all the time. I do this every day. You give me a name of the stock, I'll look at it short term, intermediate, long term. I'll tell you whether I like it or not. So this is a short term. And I said to them, I said, gee, I think we should wait a little bit. You know, there's no great rush. I don't see this thing taking off, you know. I want to see the trend broken. It's not broken? You with me? That's daily. And I'm gonna do my homework now. Let's look at it weekly. Ave Maria, look at this. This is in 2008, this is a real story, by the way. And look at, in a year's time, stock halved itself from 55 down to 25. More than halved itself. You still wanna buy this? No, I don't think so. I don't think we should be buying this. Oh, let's look at it. By the way, you got, 4 years of history. That's, I showed you minute by minute, daily, this is weekly. Let's look at monthly. Oh, God. You got 20-year history here. And this stock in 2008 hadn't been that low since 1998, 10 years ago. You know what the name of this stock is? Citigroup. Oh, excuse me, Citigroup. You know where it went? $1.50. This was the crisis in 2007, 2008, banking crisis, financial crisis. Did I have any idea that it was going to $1.05? Absolutely not. But I knew that I didn't like this stuff. What? As an investor. What's it? Oh, so
What was that previously?
what's it?
What was the price of it previously before it got to that $1.25?
Where was the price? What?
You said the price of the stock was at $1.25, it went down to $1.15.
You went to $1.50.
Okay. What was it previously as well?
When the decline was over, and the stock market got crashed. I mean, we were down 50%.
So 2007 was up like 55.
What's that?
On the charts.
Yes.
It got as high as 55, and
Yeah.
it got as low as 150.
Oh, sorry. Yeah.
How do you go around like thinking that like, okay, it's dropping right now, it hasn't been at $24 since like 1999 or whatever, and thinking that it's gonna go back up because it hasn't.
I didn't say, at the time, I didn't say anything. I had no idea what it was going to do. I'm gonna show you what I needed to see, that it wasn't on, hi there. I needed to see, but it wasn't on the chart. I'm just showing you what I was faced, real time. And the guys asked me, do I buy it today? And I said, wait. I didn't say sell it, I didn't say, stay away, it's gonna go to zero. I didn't say anything. All I said is, I think it's a little too early. That was good advice. All right, ready? What's your short term? Up, long term up, okay? Trend line, up. What's your short term? Neutral, highs and lows are parallel, right? Little neutral. What's the long term? Come on, fast. Up, up, up. You all agree?
That would,
You're all wrong.
I think it's.
It broke the trend line. You're short-term neutral, now long-term neutral. Come in, Randall, are you with me? See what happened? I gotta tell you, every time I ask this same question, I get the same answer from most people. I'm trying to teach you how to read a chart. I said to you in the very beginning, you're gonna wear a different set of glasses when you get finished. If you follow the discipline, I say get that trend in there, you draw the right trend, and you follow trend, and if it breaks the trend, I've got my immediate attention. Because I am bullish here, all the way up, I'm not bearish, I'm a little nervous, geez, someone is selling. The stock is losing momentum. Not the end of the world, could be a temporary thing, I don't know. I need more information. Boom, what's the uptrend? What's the near-term trend?
Upward.
Up, you made a new high. What's the long-term trend? Back up. Higher high, higher lows. Draw a new uptrend. I'm showing you the basic principle. Remember I started out? price is everything to me. And the next thing is the trend of price. And I'm trying to show you how to draw a correct trend and respect that trend. Yes, sir.
So Ralph, I'm seeing here that you redrawn the trend line. So
Yeah.
you only redraw the trend line until it makes a new high.
Yes. Well, in this case, I needed a breakout. I needed a new high. Okay. What's the short-term trend? What? Neutral?
Neutral. No.
Yeah.
No.
Short-term.
Yeah.
What's the long-term? Still up. Yes. Can the stock go flat while in a long-term uptrend? Of course it can. Nothing goes straight up without a pause. This was a pause. Okay? What's the short-term trend? Down? Does that look down to me?
It breaks here.
Short-term trend. Neutral. What's the long-term trend?
Up.
Oh, long-term,
Downward.
downward?
Yeah.
Is that a downtrend, long-term? Up, down, neutral, I heard that. Wait a second. Come on. What's the long-term trend? Come on, guys. Don't be afraid. I'm not going to bite you. What is it? Come in, Rango. This is your voice from heaven. What is the trend? Trend is neutral long-term. It's neutral long-term. Right? Wow. Whoa, what's the short term? Up. I purposely trick you a little bit. It did not make a new high, so it's still long-term neutral. Short-term up, long-term neutral. Oh. What's that? That's a new high. So it's short-term up, now long-term up. Folks, I'm here for one reason, to give you the discipline. Because we started out this morning saying the most important thing when you get up in the morning is the price of your stock. And the second most important thing is it going up or down or neutral? That's why I'm here. And I told you, if you follow the disciplines that I'm giving you, you will look at the world completely differently. You'll look at any data. This could be the price of a bond. This could be interest rates. This could be gold. This could be, I don't know, could be the German market, DAX. Could be anything, as long as there are buyers and sellers, okay? Right? Buyers and sellers, they move up, move flat, move down. So all of a sudden, you're gonna have an opinion on everything. That's why I love technical analysis. I don't know if I said this before, but I've said it a few times this week. I came into the business, I was a history political science major in college. I had no idea about finance. Then when my first job was to plot charts. I was a junior analyst, no experience necessary, that's what they wanted, and I was making charts. After about 6 months, guess what? I had an opinion. Someone said to me, "What do you think of gold?" I said, "Looks good to me." "What, Ralph? You don't know gold." I said, "I know the price is going up." All of a sudden, the charts empowered me that I had a decision. But you got to draw the lines correctly. That's why I'm here. What's your short-term trend?
Down.
Long-term?
Down.
Down. Down, down? You agree with this guy? Okay. What's your short-term trend? What? Neutral. Right? What's the long-term trend?
Still down.
Still down? You agree with this guy? Hello? What do you say? Neutral. Took the downtrend out. Oh, neutral. Neutral, neutral. What's your short-term trend? Down. Made a new low. What's the long-term trend?
Down.
You got it, baby. What's your short-term trend? Neutral. It's kind of choppy. I shouldn't have made it that low, but it's choppy.
That's what everybody's saying.
Long-term? Still down. Short term, neutral? Long term?
Neutral.
Neutral, good.
Yeah.
Short term down, did not make a new low, I was trying to fade you out. Look at it, ooh, made a new low. So short term's down and the long term is, you got it, bro. You got it. Intraday trading, what kind of chart are you gonna use? Minute by minute chart. Right? Forget the point and figure. Near term, I'm gonna hold it for several days, several weeks. Daily charts I'm gonna use. Intermediate term, I'm gonna hold it for several months. Weekly charts. I'm gonna hold it for long term, year or more. Weekly and monthly charts. I wanna see the long term picture. Am I going too fast? Okay. Still got time, okay. You guys know all about moving averages, right? Yeah, I'm not gonna waste time with that. You know, this is the golden cross and the dead cross. You know all that, right? What? You don't? Sure. Want me to go over it? Go over it. You know what price is, okay? Then you see on the chart, you see the little dots. Take the closing price for 50 days. That's how long? There's 5 days a week, okay? Mark 5 days. So that's what? 10 weeks? Right? So the 50-day moving average, you take the closing price, you make a little dot, and that's the dot for the day. Okay? And what you want is the price to be above that line. Then you're in a short-term uptrend. Okay? Oh, yes. The other line is a 200-day. How long is that? 10 months. Right? That's long-term momentum line. What you want is price to be above or below it. You want it to be above. Look at this, how nice that is. And when you get the short-term trend crossing above the long-term, that's called a golden cross. Japanese, that's a Japanese term. And then when you get the short-term trend going below the long-term momentum line, that's the dead cross. Okay? So those are the terms. And when you listen to these talking heads on television, CNBC, they're talking about moving averages, Fibonacci, Liberace numbers, and you know, people, the viewing audience, they're talking. But they'll say, oh, golden cross, or dead cross. Now you understand. This is momentum. Okay. Okay, we're going to skip this. I want to get to I don't have strategy. Okay. Okay. What trend is this? Come on. Neutral, right? Yeah. Phase one. If you were building a home, new house, okay, would you like a nice basement? Yeah. Yeah, nice basement, cement, walls, cement, you know, nice. You know, waterproof it and everything else, okay. If you were building a 50-story building, do you think the foundation would be a little different? Yeah, a lot different. The walls would be thicker, cement was, you got steel bars going through them, you know, all sorts of stuff. Well, the stock market's the same way. If you're gonna build a foundation in your stock, it depends how big it is. Okay? The bigger the base, the higher the space. That's my point. Okay. What is a base? It's usually a neutral trend where there are more buyers than sellers. That's called the accumulation phase. Technicians call it bottom pattern. The stock is building a bottom. It's being accumulated by more and more people over time. Okay?
Are you referring to when the stock IPOs or?
No. This is any stock. No IPOs. No. I don't do IPOs. I don't even know what that is. Yes. Before you can get a good move on the upside, you have to get a good foundation. This is the house you're building, okay? second phase of
Yep.
the uptrend phase, yeah. This is called a breakout. You're breaking above resistance, remember that? You're breaking above resistance. And when you break out here, you wanna see a lot of volume, because this is making a new 6 month or a year high, whatever. And that's everybody's, the computer is buzzing, saying, hey, there's a breakout, there's a breakout. I have it on my computer every day. I have all my stocks, I have all the indicators. I'm waiting for breakouts and breakdowns. Computer just spews it out to me.
So I have just a quick question, cause you know, you can't monitor the stocks at home just time of the day. You use like stock tickets to say if this price goes high,
Yeah.
buy more and stuff like that?
Do I use what?
Stock tickets, where it says, hey, I have a certain price here.
Yeah.
Where if it goes up, I want you to buy this amount of shares.
Well, yeah, it's not that automatic, but yes. Mentally, yes, I need a kick, something to get me, hey, you better look at this again, yes.
So my question is, if there's say there's like a phase zero, right? Phase zero is negative. Is
What
the-
phase, what?
Say, like we're looking at this chart and there was like a phase zero that was negative, is your base the phase one, you're saying, so if there's a longer neutral phase, you're expecting the growth, the phase two to be higher.
Well, you'll see my whole thing, okay, hold that question, you'll see my whole picture, okay? That's phase two, uptrend phase, everybody's happy it's going up. Phase three, it stops going up. It breaks the major trend, both short-term and long-term, right? Look at it. And it keeps trading there. You still have support, and you still have resistance. If this is the bottom, what's this? A top. There are 4 phases to price equity. That's what I'm taking you through. Phase 1, phase 2, phase 3, and phase 4 is the declining phase. 4 phases of price activity. My picture's beautiful, because I made it beautiful. You know, life isn't this simple. But I call it the life cycle. You're born, you live a wonderful life, you get old, and we all go to heaven. Okay? Where am I on the cycle? Whenever I look at the market, am I bottoming out? Am I breaking out? Hey, am I topping out? There are more sellers than buyers. Why don't you ask yourself that question every time you buy a stock? Where am I on the cycle? And you gotta start all over again, you gotta build it. I'll be finishing in a minute. You heard of Warren Buffett? Or Buffet, depends how you want to pronounce it. You guys know that. Buffet, look at this stock. Who buys value? Warren does. This, if you said to me, I want a value stock, think about it. You want something that gets crushed. It's cheap. Look at it, down from 100. And it's sitting there doing nothing for maybe a year or 2. You know who buys down there? Warren Buffett. Because you know what? He doesn't care how long he keeps it. In fact, he owns Coca-Cola since the first bottle was opened. Seriously. So if you said to me, I want to buy a value stock, well, I'm not going to buy one up here. I might be overvalued, I don't know. I want to buy something down here. Cool? Momentum stock, of course. Anything that's going up is momentum. I'm not buying something down here, it doesn't have any momentum. Overvalued. Here's a stock going from 20 to $100 and can't go any higher. By the way, the earnings are phenomenal up here. Everybody loves it. They're talking about it. It's the hottest stock on a TV show. Oh yeah, you got all this network in it. Yeah, it's triple. Smart money's in there saying, oh, you like it? Yeah, you got it. Smart money's in there saying, I think it's already discounted. Look at it. And oh, by the way, at the bottom, People hate this stuff. Yeah, look at that, the $20 down from $100, a piece of junk. Yeah, that's when these smart money says, well, gee, no one likes it, maybe I, it's a chart, that's why I'm here, to show you how to apply the terminology to a graph, a picture. I don't call it technical analysis, I call it data visualization. You're looking at data. This could be anything, yes.
That would be like, nowadays they use that stuff like Tableau, right?
What's that?
Tableau, that's what they use it for, like show data visualization.
Tableau? All right, I think I have a little bit left before I'm taken over by this guy. Vulnerable stock. Obviously, anything in a downtrend is vulnerable, okay. Here's my last story. I got a phone call, again, many times, from a client. And this big institution, big large bank, called me up and said, listen, my boss told me I can buy one or two stocks. Which one should I buy? And the stocks that he gave me, or he was told that he could buy, for the portfolio was American Telephone, you know American Telephone. Does anybody know what Eastman Kodak is? Or was? Yes. Kids, your generation doesn't know Eastman Kodak. Eastman Kodak was one of the biggest companies in the world. They used to make cameras, all the film for the cameras, and then you had to get all that stupid stuff, you had to send it, and then they make it now it's all on the phone. What the hell? Eastman Kodak went out of business because they didn't ship. But anyway, when I was asked this question, Eastman Kodak was in the Dow Jones Industrial Average, and so is American. Okay, so listen to this. I get a phone call. This guy's going to buy a lot. It's going to be hundreds of thousands of shares, and he said they're both blue chips, and they're both in the Dow Jones Industrial. How could you go wrong? Okay. So I said, well, let me look it up. And I found that the both stocks are selling at $60. One was $60 here. One was $60 there. Which one would you buy? The one on the left or the right? You think so? Why? Because they had a bit of an upward bias, and the other one had a downward bias. Well, that's what I did. I bought an American Telephone because it looked like this. That was Telephone, and that was Eastman Kodak. Well, and I made him buy American Telephone. About 6 months later, he called me up and said, hey, Jim, you little turkey, you made me buy that stupid stock. I said, you know where it is today? I said, yeah, but $60. He didn't make any money. I said, hey, banana head. I said, you get 5% along the way. Oh, by the way, you know where Eastman Kodak is today? That's a true story. I don't lie. Cheat and steal. Okay? I'm going to end it right there. This gentleman is going to take over and explain to you the organization that I co-founded with two other great guys. And now it's multi-international, and it's got certification. Dan, I was talking about, or the folks that came in late. The CFA, you gotta get a CFA to get into business, understand fundamentals. But you also have to get CMT. And that's technical. You put that together, and that's your fusion analysis. And I think, my opinion. Okay.
You want me to pull your slides up for you?
Yeah. Okay.
This is you right here.
No,
Yeah.
I'm sorry.
So, hi, good morning everyone. I'm Cedric. Yeah, I'm a member of the CMT Association that Ralph co-founded. So you can tell from his passion where we really want to take this organization. It's an organization based on the premise of technical analysis. It's a professional organization that you can use to get an edge in your career. Right? So allow me to tell you about the academic partnership program that the CMT Association currently has with Morehouse College. Right? So, man, how can I see my notes? Is there a way I can see my notes? Sorry about that, guys. Yeah.
At the bottom.
It's your
Yeah.
presentation, Rich.
You can just present like this.
Okay.
Just use the down arrow. And
Okay.
then you got your notes down there.
Yeah.
Does that work?
Yeah. So are you guys? Yeah. So I'm gonna present in this format. I hope you guys don't mind, right? So the CMT Association. So about the CMT Association, it's the Global Authority of Technical Analysis, and it's a globally recognized certification. Right? It started in the 70s, and it equipped investment professionals, traders, guys on the floor of exchanges and commodities and stock exchanges, the ability to analyze trends and make data-driven decisions, right? And the CMT designation, again, is recognized worldwide, and it provides expertise in market behavior, technical analysis indicators, and also risk management. I'm sure you guys would have been exposed to moving averages, the relative strength index, placing market orders or limit orders and stop loss orders, trailing stops. All these are incorporated. All these are used by technical analysts and are covered within the CMT program, which I'll get to shortly. So I'm also a member. I'm a co-founder of the Global Black Caucus. This is a subgroup within the CMT Association designed to diversify the CMT Association. So when I got my charter in September 2014, right, and I attended the conferences and so on, and what I recognized, Dominic and myself are co-founders. Some of you would have met Dominic yesterday. There weren't a lot of people that looked like me within the conferences, and there was so much information, and I was getting so much of an edge in the markets using technical analysis. I really thought there was a way for this to have more exposure for people like me, so that they themselves could also get an edge in the financial markets. Right, so I met Ralph a couple of times, and Dominic met Ralph a couple of times, and he expressed the same thing. He was like, the association, it's just filled of old white men, and to do something about it. And I said to myself, and I met Dominic at one of the conferences in 2019, and we came together over a couple of years and decided to do something about it. So here am I today, sharing with you the opportunity that was presented to me probably over 10 years ago on the CMT program, right? So the mission again is to elevate our mission, the Global Black Caucus mission, is to elevate the field of technical analysis by mentoring and educating finance professionals and students of African descent, right? Why does this matter? Because it increases the representation of black professionals within investment management and trading. I'm telling you, if you were to pursue the CMT designation, the CMT program, it's going to give you an edge, like how it gave me an edge in the financial markets, right? So what is the CMT program? So I'm also a dual charter holder. I have both the CFA and the CMT, The CMT program has 3 levels, level 1, level 2, and level 3. The exams for each of these levels are offered twice a year, right? And there's also a curriculum. Attached to these exams, right? So level 1 is the introduction to technical analysis, which you would be exposed to currently. Everything is at a more of a definitive level. And level 2, you do more theory and analysis within technical analysis. And level 3 is where you integrate what you learned in level 1 and level 2 into real world scenarios, right? I think level 1 and level 2 are multiple choice exams. They take probably around 100, 150 study hours to complete. And level 3 has short answer questions, right? It is the preeminent global designation for technical analysis around the world. There's chapters in India, there's chapters in Europe, there's chapters in the US. Right? I'm working with Dominic to see how we could expand the CMT into the Caribbean chapters in Latin America. I'm working with Dominic to see how we could expand the CMT into the English-speaking Caribbean as well as the continent of Africa. Right? So the body of knowledge, level 1, again, goes into market trends, price patterns, behavioral finance, and some volatility analysis. Level 2 goes into the more of the advanced technical indicators like the Bollinger Bands or on balance volume indicators, trading systems development, and statistical applications. And level 3 speaks to more risk management techniques, looking at asset correlations, more statistical measurements, and integrating that with technical analysis as well as portfolio management applications. Right? The curriculum is designed to equip candidates with practical knowledge. I mean, so one of the things that gave me an edge using technical analysis, it was during the COVID, February 2020, the markets were breaking down. Right? So I work for a company based in Trinidad and Tobago. We manage about $3 billion US in assets. We are basically money managers. We manage $3 billion in assets. The markets were breaking down, and we were hearing something about something going on in China, but we didn't know exactly what it was. This is February, right? So using technical analysis, I had to reach out to my boss, the CIO, at the time, and say, hey, we need to come out of the markets. We need to preserve capital for our investors, because what I'm seeing here using technical analysis isn't right. So said, so done. We came out in cash, and the markets continued to decline. I think it got down like to 20%. It was down like 10, and it fell another 15% or thereabouts. I also was able to design investment models to know when to go back in. So it's not just technical analysis. It's not used just to know when to come out or when to hold, but it's also used to know when to go back in. So using my investment models, I again alerted the team and the CIO to re-enter the market right near. It was a couple of days late, but I mean you're not always going to get the low the end of the trend, right? And we got back in the markets early April. And if you would look at the S&P 500 between the end of March 2020, April into September, you would see that there was a strong upward move to the right, top of the right? So that is how going through the CMT program, that is how I was able to use practically, not just theory, to use those skills to make those sort of decisions and help people with their investments for them to make money in the short, medium, and long term, right? So now the academic partner program. So this is a partnership between the CMT Association and universities such as Morehouse College, where it helps introduce technical analysis into the finance programs, right? So you guys have access to scholarships, mentorship, as well as career building opportunities, right? So the Morehouse students, you guys have access to all these things that I previously mentioned. So here's one of the major benefits of accessing or starting the program through the academic partnership program, the CMT program through the academic partnership, right? The exam fees is typically $825. It gets reduced to $195, right? You got access to Optuma chart. I don't know what charting platforms you guys have access to, but the Optuma charting platform is a very powerful charting platform. You could use it to do back testing, create your own trading strategies, and so on, as well as do some technical chart analysis, bar chart analysis, candlestick analysis, pattern recognition, all these sorts of fancy things, right? And you have access to their prep course, right? And a discount on the curriculum. You also, with the academic partnership program, there's the investment challenge. So it's a 2-month virtual investment competition based on technical analysis. You get to compete with students just like yourselves all over the world. And you have access to financial services recruiters, right? And mentoring sessions from the weekly top performers within the challenge, right? So that's it. So feel free to have a look. You could take a scan for the academic partner program and have a look and register for the CMT Level 1 program. Alright? If you guys are on LinkedIn, feel free to add me on LinkedIn as well, and if you have any further questions, just shoot me a message.